Full disclosure, today's guest, Roger Ehrenberg, is an investor in Eberg Capital. That's the fund of which I'm a part. We do seed and pre-seed investing into software companies. And disclosure number 2, that wasn't a disclosure. That was a humble brag. Because Roger Ehrenberg is amazing. He is the founder of IA Ventures, which, if you haven't heard of it, is one of the most respected, among other venture capitalists in particular, venture firms of all time. Both for the way they executed and for the results that they returned, which are just phenomenal. The incredible thing, or the thing that makes this story more incredible, is that he built that firm, built that reputation, one of the best venture firms ever, after having a career on Wall Street where he managed billions of dollars of risk capital, a career that by any measure would be an entire 5 careers for anybody else. After that, he created one of the greatest venture firms of all time. And then, well, there's a third chapter, and you're going to hear about that chapter here too, which is as incredible, if not more incredible, than the first 2 chapters. And it's probably going to get you pretty excited about investing in the world of sports. Yeah, that's right. In any case, you're going to enjoy this episode. My guest today, Roger Ehrenberg. Welcome back. All right, welcome back. It's the Something Venture Podcast. I'm Kent Lindstrom. I am your host. My guest today is Roger Ehrenberg. How are you doing?
I'm doing great, Kent. It's great to be here.
Thanks so much for doing this. So I put Roger's career into I'll call it 3 acts, if I can. A first act, and this part fascinates me, working as a trader on Wall Street, running a trading operation. Followed by founding and building IA Ventures, and we'll start there, and then a third act, which is helping with the renaissance of Detroit and investing in the very wide world of sports. But IA Ventures, seed venture firm, really became sort of one of the most famous, respected venture firms. And we don't need to overdo this bit, but Roger was on the Midas list. A number of hits, extremely well respected. I'll say like kind of a venture capitalist, like if somebody's trying to model out how to do maybe early seed stage investing, they would look to Roger and IA. And also one of the most famous, I think, seed investments, which was Trade Desk, which was an investment where, as a seed firm, you ended up with something like 20% of the company at IPO, which in this world is just this sort of crazy, unheard of thing. That's the thing that I associate with when I think of IA. And by the way, I also think of that story, the Trade Desk. It's interesting how much people rewrite the venture, history. Well, Facebook would have been nothing if I hadn't, met Mark on a walk with his dog and told him to buy, that whole thing. The path that Trade Desk took was not straight, right? Didn't you extend it and almost go out of business? And when you get behind the scenes at the sausage factory, this seems to be a pretty common story.
Oh yeah, I mean, it certainly wasn't the accidental $60 billion market cap success. Look, I mean, all credit to Jeff Grain on the vision and the grit to get it to where it is today, because it's not that normal for somebody who was toiling away in the engine room, scrapping for dollars, selling ahead of product fulfillment, to actually be the scaling CEO that took the company public at less than $1 billion valuation, and now to have it as a company that he's running at a 40, 50, $60 billion valuation. That's a very rare individual.
Yeah.
But yes, I mean, the trade desk got very close to running out of money any number of times in those first 2 years. Jeff had opportunities to sell the business for 10 million, 20 million, $30 million. And there were days when it seemed like, wow,
Yeah.
like we want you to go the distance, but are you comfortable going the distance, giving everything that you've been through? And he was a founder who had incredible clarity of vision, deep, deep conviction that he was right, and that it was really just a matter of time, and he just needed to turn the corner, in particular on on the tech build where he could then have a product in market that could compete with the real-time bidding engines that were existent in the early 2010s. And his founding partner Dave Pickles helped to get that going by 2012, and then it was pretty much a rocket ship from there.
Right.
But those first 2 years and bridging three times and raising a very small Series A
Yep.
really highlight the messiness of
Yeah.
going from a PowerPoint to product market fit. The rest is much easier, but that
Right.
0 to 1 is insanely difficult.
Yeah, the homebrew guys have a fairly similar story for Chime was like that, where it was kind of not obvious for a long time, and they bridged it and did kind of a sideways Series A, and then all of a sudden, Chime is the number one thing featured on their website, like that, kind of that path. It's an interesting thing too. If you don't work in venture, you might not kind of see this thing, but it is that weird concept that to create $1 billion company, it's hard to get anything going, and you should not start a company. It's a bad idea. But you do have to turn down like a $50 million offer that would change your life, and that's a really less obvious thing than like you have to work really hard and grind through the glass and all that. Is you also have to have somebody who, when he and she gets the offer to sell their company for $100 million, says, or $1 billion if you're Mark Zuckerberg, says, no, it's bigger than that. And that's a second bit of craziness you need to start to build $1 billion company.
Oh, and by the way, Trade Desk got that offer just before the IPO.
Yeah,
So they did get that offer,
right,
that kind of $1 billion offer. And Jeff was like, not interested.
right.
Like, just not interested. And I think something, Kent, that's emerged certainly in the time that I've been a venture capitalist, and, let's say for better for worse, I've been doing this for 20-ish years,
Yeah,
that, the notion of founder liquidity done right is an acceptable way of aligning risk and reward with founders and investors.
yep,
Because is it real? And I know there are some firms that are dogmatic on this issue and say zero founder liquidity is appropriate at any time.
yeah,
I think we were much more pragmatic, and not just pragmatic, but I would argue humanistic, in that there is some amount of money that enables a founder to work better,
right.
where stress associated with day-to-day living, whether you're living by yourself, you have a partner, you have children, you've got a house, you've got school activities, all of those things that cost, especially in the coastal large
Yeah,
cities, expensive to live, where 1 million, $2 million of secondary can make a huge difference in
yeah,
somebody's life. So it's not like, oh, there have been a bunch of bad secondary deals, right? Where go-go companies have allowed founders to go and take tens of millions of dollars off the table,
right. And then
arguably
disappear.
before product market fit, and
Right.
then the companies go poof,
Yeah,
right? And whatever, we don't need to go into any number of high-profile failures in that regard, but we always felt at IA like there was that number where you're really a partner with the founder
right.
in wanting to go the distance, but where the founder didn't feel like I'm the one taking all the risk. And when I've created this very significant amount of value with this huge option upside,
Yeah.
so isn't it fair that I be able to mitigate some of my risk? And we felt very strongly that there were the right circumstances to do that.
Yeah. Well, that's definitely a vibe shift from when I started in Silicon Valley. Because when I started, my little early startups, the whole thing was like it was really bad to do that. Like it was really looked down upon, like to take any money out of the company if you were the entrepreneur. And like there was somehow the VCs had a narrative, and I'm mad now because I know how much the VCs were making themselves, that you should be struggling. And then, to succeed, and you're like, but you are already struggling on the business side. Like it's hard enough to wake up and have your employee tell you they're about to quit and you're missing payroll and you can't raise money. You don't need extra struggle, by getting paid $74,000 and, a year in San Francisco with a family. And that changed somewhere along the line. Then, of course, you're right. It became this extreme thing where people would take $200 million out of a pandemic era bubble, and then the whole thing would go away, and the founder was, wealthier than successful founders. That's kind of a crazy, artifice as well.
Totally.
So
Totally
you,
agree.
so I want to understand that just this first part. I don't really want to get to the sports thing, but this first, you start as a trader on, Wall Street. I worked in Chicago, not in option trading, but you'd get off. These guys would get off work at 2 o'clock in the afternoon, come in from the option pits, and start drinking at 2 o'clock in the afternoon, I guess. And by the way, they were mostly Big Ten athletes back in the days who was on the floor. And these guys would, you'd be drinking. Oh man, today I lost $400,000. And you're like, what in the you what? Like my job is $32,000 a year, and I'm proud of it. You lost $400,000 today, and you're having a beer on the street. That like trading, it seems like a crazy. The It seems like precisely the opposite. Here's what I'm trying to get to. Precisely the opposite of seed stage investing, where you put money into something, you make up any story you want for 10 years, right? Like if you're trading options, if you short the yen against the dollar and you're wrong tomorrow. You can tell your buddies all you want, but the yen doesn't care. How do you character? I just like to get a sense what the feeling is going from that crazy high feedback instant world to I can't imagine a more different part of the investing world.
I like you're an excellent storyteller. You really did capture the vibe of the pit trader in Chicago during that era. So I was born in Detroit, but I grew up outside Chicago
Yeah,
and rode the Chicago Northwestern, and yeah, I saw I saw
yeah,
those people.
yeah,
Um, so look, so I was an upstairs guy, not a downstairs guy, so I
sure.
was never on the floor like that. I worked on trading floors at Citi and Deutsche, but my where I really felt what you're talking about, being on the opposite end of the liquidity spectrum of very early stage venture, was when I ran this trading business called VB Advisors, where I had 16 trading teams that I allocated capital to, most of which were in the liquid markets. There were a few special sits, but it was largely, you know, convertible arbitrage event, things that, we did a closed-end fund arbitrage strategy. It, they were things that subjected themselves to being marked to market on a daily basis.
Right.
So we were running about $4.5 billion of unlevered capital, $16 billion of levered capital.
Wow.
Okay.
Yeah. Yeah.
And in 2003, we were off to a roaring hot start the first 5 months of the year. Then we had three successive days in May where each day we lost more than $50 million,
Wow.
$150 million in a week.
Wow.
So
Yeah.
that $400,000 that your, pit trading buddy that
Yeah.
you overheard,
Yeah.
uh, ha 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 ha.
Right.
It's like,
Right.
I mean, when you're talking, so that, that's akin to running a massive liquid market hedge fund, and
Yeah.
it's stressful as hell.
Yeah.
Um, then you're like, are you insane going from that to then the exact opposite end of the liquidity spectrum, where you have, my teams were, you know, I had 130 PhDs, data science teams, and this is in the early 2000s. This is at the very frontier of machine learning and big data. That and part of the raison d'etre for starting IA and being like the first fund focused on big data as an investable theme was my experiences on Wall Street.
Right.
And so the funny thing is that literally I decided to do the opposite. And what I found, it really it wasn't totally the opposite. There is the Venn diagram where the overlap is in building high performance teams and understanding the elements of high performance teams. So that was the same, whether it was in the liquid markets trading teams or it was in the founding teams of tech startups. The difference, as you rightly say, is in the feedback loop.
Right.
In one hand, I had a daily P&L. In the other, call it more like a 6 to 7 year P&L. And everything in between being, TVPI is not DPI. And until you actually have realizations and liquidity, it's all kind of conceptual. And you have some of those discontinuous mark to market bumps down when you go through macroeconomic shocks. And we've seen the venture industry dealing with a bunch of this, over the last 3 years in
Right.
particular. So, in that way, there are some similarities. Uh, but there is something about, for me, the satisfaction of working with and empowering great visionaries that is so much more exciting in the seed stage realm than it is in the trading realm.
Right. And so you come into the seed stage world, and kind of one of the crazy things that happens at the seed stage is you have a company, and we do. I don't know if anyone, many people do. We have pre-product market fit, and you've got the story, and you've got the person, and you're like, I know we're right about this, and then it actually works. Like the product and the market come together, and it's working, and it's a rocket ship, and it's the second best feeling in the world. The best feeling is being the guy doing it, not the guy investing in it. But then, was there a point you had such big success with a couple things? And I've been curious about this with like, guys who invested in Uber and that kind of thing. Is there a point where one company or two companies become such a big success that kind of nothing else matters? That your TVPI and all that is just based on so much on trade desk that you might as well just spend all your time on trade desk? Or how does that evolve for you over time?
So, of course, there's almost an inverse relationship between a company's success and your ability to help.
Right.
So, in a
Yeah.
company like Trade Desk, how much did Jeff Green really need me once the thing really started taking off?
Yeah.
I would argue that probably one that, again, is very successful. It's a deca-billion-dollar company, which is Wise, right? Which uh, we invested in, you know, uh, slightly later, but not much relative to when we invested in TTD. Um, but that was one because in general, it was a much heavier lift. TTD, there was a heavy tech lift to
Right.
get to the point where the incredible visionary product could be launched in market, and then you had so much leverage in the business model that it would just go. But in the case of Wise, you're talking about being regulated in 60 different regimes. You have this global customer service requirement. You're dealing with individuals, right? I mean,
Yeah.
now obviously the company powers Morgan Stanley,
Right.
but that's not the way it started out. It started out as a money transfer company challenging the high street banks. So that is something where like my and Jesse and Brad's ability to help was it for a much longer period of time, even after it was clear that this was going to be very, very successful.
Yeah.
It was a heavier uh
Right.
a heavier burden to get to success than once Jeff hit it with Trade Desk. I mean, Trade Desk raised $8 million of primary capital to be the company it is today.
That's
Like
incredible.
that's so rare.
Right.
Like there are very few companies that
Right.
have raised so little capital and generated so much value. And look, I mean, Wise didn't raise that much money either. They were profitable from very early days, but to grow and to choose how to best grow in what markets and to do so in a highly compliant way so as to not blow up the whole business because of some regulatory or compliance screw up somewhere.
Yeah.
That's That's a lot. That's a really, really hard business.
Right.
So anyway, my point is that it is different by company as to how much you can really help after they've become super successful.
Right.
And then the other point is, I think you either love company building or you don't. And
Yep.
like, so I started IA, built a really, really, really good business with Brad and Jesse, left, was economically pretty successful, and went right back into very early stage investing after at that point, 17 years of this Michigas. Why am
Right.
I doing this?
Right.
Why am I doing it? I
Right.
certainly don't need to do it. I do it because I love it,
Yeah.
which is all to say, I like working with the teams. I like helping people win, and I like winning myself.
Yeah. And
It's pathological.
how did you, it's not, it's ever, people ask me like when advice on starting a company, and my advice is do not start a company. It's a really bad idea. And if they're like, well, I don't care what you think, I'm going to start a company anyway. I'm like, okay, you might be worth investing in. But yeah, you should not start a company. So how did venture change over the arc of time that you were there? Um, seed stage investing is over every 5 years, right? It's all over. The big firms are going to do it. It's all over. Everything's been invented that's going to be invented. Nobody can come up with anything. You know, the internet's going to be as big as the fax machine market, et cetera. How did it change over the arc that you were involved?
Yeah, a lot, obviously. I mean, so I think the notion that seed stage venture done well occupies an unusual place on the risk reward continuum. That in fact, it is arguably the best place to sit if you're disciplined. Because if you're entering firms at the A or B, what this data that I've seen illustrates that Series A and B investors are not getting appropriately compensated for the risk they're taking in light of the much higher prices they're paying over seed. So that the actual de-risking that's happened between seed and A and B
Right,
many times is overvalued relative to the ground truth. So that if you're going to take that massive risk, better to get paid for it at seed
right,
than to do it at the A or the B.
right,
Now, I would argue, and I actually have written a lot about, I wrote a lot about this, about the hedge fund industry before I even started IA, and I've written about it subsequently, although it's been a lot of years. This notion that I think the natural shape of a mature industry is a barbell, where you have a lot of firms, and you'll always have this like bubbling sea of firms that are very small.
right.
It is very bespoke, it's very personal, it's very high touch, it is high risk, high reward, and there will be those who do it extremely well, and that will be an extremely profitable place to be.
Yep.
Then you've got the larger firms, and I'll call it the multi-strats, the one that are almost like corporations that have much, much, much larger AUM that are entering companies at much later stages on balance than the very early firms. And they are investing in growth. And they can achieve attractive risk adjusted returns because they're not entering at a time when success has sometimes been declared, but it's been declared on false signals.
Right,
They're investing after success is demonstrated, and they're really providing scaling capital.
right.
I think that is a really good place to sit on the risk reward continuum. I think the stuff in between is unnatural.
Yeah.
And I think the shape of like, look at the hedge fund industry, which is arguably more developed and has been through more cycles than the venture industry. That's really what it looks like. It really looks very much like a barbell. And the firms that are in the middle are trying to transition to be on the far end of the barbell, the larger firms,
Right.
but they're not living there. They're on a journey.
Yeah.
but that you have these smaller, the firms that stay small that can generate spectacular returns. They're super nimble. That's a great way to be.
Yeah.
Or look, if you can get great fee income by effectively being an institutional grade asset manager of tens of billions of dollars and generate lower but acceptable returns, that's great too.
Yep.
And I see venture is now starting to look very much like where the hedge fund industry looks, which is this barbell.
Yeah. Yeah. Well, we're going to stay on this side of the barbell because, and every day, if you put aside all that stuff, just see all these companies, and every 6 weeks or 2 months, somebody comes in and you're like, I don't know if you're going to change the world, but you could. Like, you could. Like, this is incredible. And then, the journey from it's a $10 million thing that's got nothing to, hey, customers care about this thing and it's growing is like, again, second best thing compared to being the entrepreneur when things are working. What do you make? I want to get to the sports thing, but what do you make of the current the VC vibe shift where VC's going to Washington apparently? Like David Sachs is off to Washington, Scott Cooper is the well-known venture capitalist, and Andreessen Horowitz. All these guys are suddenly in the mix and off to Washington. What do you never seen anything like it?
Never seen anything like it because it's now VCs, but we've had this for generations with Wall Street. And it is just an evolution of differential power. And right now, tech is reigning supreme. Not that Wall Street doesn't have influence, it will always have inordinate influence.
Right.
It's just we are now at this point where global tech, as a percentage of global GDP, has never been higher, is on the rise, and and because it touches every part of government, either as a policy matter or as an investment matter, I understand it. Now you can argue that it's too much too fast and that perhaps there's an imbalance, but I understand it.
Yeah.
And I do think it is directly a function of this reordering of economic power from those who make money and move money to those who create businesses and make money as a derivative.
Yeah. It's certainly fascinating to watch. So you turned to sports. You went to Michigan, right?
I did.
The so that means I went to Northwestern. So that means that you saw Northwestern play at your homecoming a number of times. Because in the
Hmm.
Big Ten, what everybody would do, Northwestern, if you don't know, the Big Ten used to be not the best sports program in the Big Ten. And therefore, people would always invite Northwestern to their homecoming. So they would have a win at their homecoming. So Northwestern would be like the belle
I
of the
don't know
ball.
what I don't know what you're talking about.
Yeah. Well, joke's on you because Northwestern would get half the gate. So they would go to Ohio State and Michigan and get half the gate. And people would say, "Why don't you join the Ivy League?" And they'd say, "Because we get 1/10 of the TV revenue." And so it worked for Northwestern, and it was great. Actually, being there was great because you'd see all these guys come, like the best. We'd see Michigan come play and Ohio State and Indiana with Bobby Knight would come and throw his chair or do whatever the heck it was. It was pretty fun. But how did
Well, I grew up right next to Northwestern.
which
I don't
well
know if you
where?
know that.
Yeah.
Winnetka.
Oh, okay. Oh,
Yeah,
very.
I took classes at Northwestern. Northwestern is great. I went to the
Oh,
old Dyke Stadium,
yeah,
sitting on aluminum bleachers,
yeah.
when it was, now
Oh,
you look at Northwestern's athletic campus and it's spectacularly beautiful.
it's amazing. Look, I loved it. I went there, and like when I went, it was like, oh, you should have gone to Harvard. Harvard was cool or whatever. Man, screw that. It was great. I was in a fraternity. That was like super fun. Not a big campus. We got to see all the Big Ten sports. It was David Schwimmer was in my fraternity. Stephen Colbert was like running around. I strongly recommend the Big Ten and Northwestern in particular. Although I hear Michigan's really good. Um, so how do you like? Do you bought us into a sports team at some point, right? A baseball team? Is that did I get that right?
Yeah, so the first uh, Ehrenberg family investment in sports was as a minority partner in the Miami Marlins.
Yep. And so you go into leaving behind IA Ventures. You've accomplished a ton. A lot of great organizations have got a lot more money to spend on what they do, and you start your firm that's now with your family that's going to invest in sports and things related to sports. Is that what Act Three is in my little analogy here?
I would say it's part of Act Three. Act Three, also wraps the affordable housing in Detroit business into it. But to be honest, Ken, when I left IA, it wasn't like in the same way that when I left Wall Street in late 2004, it's not like I had clarity of vision as to what I was going to do with the next phase of my life. I had started angel investing coming out of Wall Street. That
Right.
turned into my focus, and then IA was born of that. When I had invested in the Marlins before leaving IA, I leave IA, and then I start spending more time in and around the sports ecosystem and start developing a thesis that, huh, there's there's something here, not just in terms of professional franchises, but also in terms of sports venture and tech, and that I saw a market that felt reminiscent to me of the early 2000s in venture in terms of in tech venture, in
Yep.
terms of the amount of capital and focus and kind of sophistication, if you will,
Right.
in this space, that there was a mismatch between the importance that sports had in society and the amount of energy, effort, and focus being placed at early stage companies servicing
Right.
sports.
Right.
And so that eventually crystallized into this notion, okay, well, I'm going to try and be, one of the people to help reshape this. And I ended up using investments in professional sports franchises as a vehicle for both building network credibility and personal family asset diversification in order to get this flywheel going to occupy this important place
Right.
in the sports ecosystem. You can think of, people that are doing this on a much grander scale, like David Blitzer, and Bolt. There are a handful of folks, the Fertitas, that are doing things in this vein that have kind of venture and franchise ownership together. I probably have the most intensive, dedicated effort at the very earliest stages of sports and media related startups than anybody else.
Right. So there's the teams themselves. Now, why did you start with a baseball team? And how is baseball doing as a sport? I mean, it seems of all the things that the kids might want to go see in terms of sports. I don't know if is baseball. How does baseball rank?
So baseball actually was very stagnant and declining,
Yeah.
and now it's on an uptick,
I love
partly as a
the new I didn't mean to interrupt. I love the new products, by the way. The thing where they made all the I went to a game. I may go to
yeah.
games all the time, but I went to a few. I was like, this is cool. Like all those, they made the game faster in a bunch of ways. And my personal opinion is it works.
That's what the data shows. And whether it's, attendance, merch sales, you name it, baseball is on the upswing. And you're 100% right. I think, I definitely have had differences of opinion with Rob Manfred on certain issues, but the rule changes that he pushed for and got in, I mean, generationally important.
Yep.
Also, we have such an incredible number of great young players and stories that in today's world of social media, uh, it is just so engaging
Right.
to see these players understand their stories, understand the dynamics that each of them are managing. That I think. where baseball was really, a laggard in the social media realm, both in terms of its use of social media and the players, that there's really been an explosion in a really positive way, which has made baseball increasingly attractive to younger cohorts that had kind of abandoned it
Yeah.
for faster moving sports.
Will MLB ever be able to sort of extend into like south of the border in the United States? Is that ever going to happen? Mexico City or wherever it
Look,
might
I
be?
think in general, I think for the US-based professional leagues are very interested in global expansion, and you've seen it with the NFL and the NBA very, very actively. And I think you'll see it across all professional leagues because why not? There's the
Yeah.
demand. The sport is compelling,
Yeah.
whether it's south of the border or across the pond. So I am very, very excited for the kind of continued increase in value of sports IP. And then that then begs the question, well, is there more sports IP than just like the big five sports? And the answer is sure. There are some really exciting emerging leagues that have now taken hold and more investors in some of them. And it's fascinating to see how some of these emerging leagues are using different forms of distribution to get off the ground than their big five brethren. Because now, if you have great engaging content, you can distribute over Twitch and YouTube and not need a big deal with a network or an ESPN
Right.
to get going, where production costs are high and the balance is shifted where, an emerging league is not going to get a payment from a streamer out of the box. They're going to pay. They're going
Right.
to pay for production. There's going to be this, you know, service level that they're going to need to uphold in order to meet their obligations under the distribution agreements. Where if you're self-producing and you're putting it out there on YouTube and Twitch, and I'm not talking about emerging sports that are variants of the major sports. I'm saying things like golf,
Right.
right? Like
Right.
talk about an explosion. We own a par three golf franchise, and you can only look at things like, Good as being one of many, many examples that now, have, millions of engaged viewers on multiple streaming platforms, and like
Yeah.
they didn't start with a network deal. So
Do you
anyway,
s-
it's so interesting. It's like a convergence
yeah.
of all these different things.
Well, and sports seems like the last thing that people will, you know, care about and why. I mean, the streaming thing has made the concept of getting together for friends on Thursday night at 8 o'clock just not a thing. But getting together for the NFL playoffs, the real time aspect of it, and there's only one of them. There's not a million. Makes it kind of the last big thing. Do you think could anything else emerge? I mean, every few years, someone's like, 3-on-3 basketball is going to be big, or drone racing, or ultimate frisbee, or do you think there's any chance for something kind of newer to emerge? I mean, I guess UFC emerged. The
Yeah, I mean, look, I think it is going to take time to see. Well, okay. One, it has already made it, and then there's dozens that are emerging. What's made it is UFC,
Yeah,
right? UFC's made it. And then you've got a challenger brand like, PFL, and there are others. Um, Obviously like different variants on soccer or European football, with Kings League and Baller, which we're in. I think again golf. I think the Live. I think opened a lot of people's eyes to just different ways of experiencing a very traditional game that again folks like Good had already been experimenting with, and I just use them as probably the biggest example. There are dozens of golf channels that have millions of followers,
right.
and by the way, you were talking about um kind of synchronous versus asynchronous, and like the NFL playoffs being something where people will get together and watch together. A lot of people do watch together streaming on YouTube, but they don't need to be sitting in the same room, but
Right.
they can be watching together. And that is a new phenomenon. And I think something that also is connective tissue that bridges the live sports personal engagement gap is sports betting,
Yeah.
where sports betting has become massively social, and it's not, sitting there in an off-track betting parlor with slips and yellowed fingers from
Right.
your cigarettes
Wow.
looking at the next race. This is, a bunch of, young, energetic men and women sitting with groups of friends, you know, with multiple screens, sitting here looking at the live betting opportunities. They might have their six-leg parlay that's going to carry them through the weekend because it's fun and engaging to see how it might
Right.
play out. But at the same time, they're watching their favorite game and they're going and they're betting in real time.
Yeah. So what are the big what are the components? So you obviously you can invest in different sports teams, emerging leagues. What are the technology components? There's gambling. I assume there's gaming. What are the tech companies around? We know what Netflix is doing and Amazon.
Yeah.
What are the,
Yeah, but there's media. So there's, media and infrastructure companies that help emerging leagues either become bettable or distribute their content broadly. So call that infra, and then of course like things like yeah, real time. So, video, like super cutting edge video technology that occupies like one part of it. Then you have analytics. So companies that are in the AI machine learning space helping teams value their players, whether it's for NIL, the transfer market, um, player health. So there's this whole sphere of data analytics around sports. Um, so there's teams, leagues, media, infrastructure, analytics. I would say that pretty much covers the landscape. But one thing I would say, Kent, that's important is I'm listing these things off in serial order. But part of the reason I got so excited about the sports opportunity as a mega trend, aside from it being underinvested in and underfocused on at the earliest stages, is there was this massive convergence.
right?
And sports, media, and social are all coming together.
Yep.
And I think that's super exciting and a durable trend because I really do feel like sports IPs are one of those things that are largely acyclical
Yep.
and sports as a general matter bring people together. And I love that.
Well, and going back to the Greek games, going back to sports during wars, like to keep people's morale up. I mean, it's obviously not a fad, right? In any sense of the game.
For
And
sure.
and now I think you have a thing too. I mean, there's kind of I've always been intrigued. There's the sports that you play. So I rowed like a boat in at Northwestern, which again, not the best rowing program. There's a theme Northwestern great at sports, but there's sports that people play and watch. So soccer people play and watch, tennis people play and watch. Football, most people don't play football. Well, maybe they do,
Mhm.
but not really. Nobody rows, I'll tell you that. Like, growing up. But it's kind of interesting. I assume things like soccer and tennis probably have some popularity due to the fact that golf, people also play them and kind of project themselves into what they're seeing.
Mhm. Yeah, I think that's an interesting filter. At the same time, there's lots of emerging sports that you can't really approach that way, right? Like Sail GP,
Right.
right? So how many people are hopping on high performance yachts and flying across the water at 30 knots?
Yeah,
Stuff
that's
like
true.
that. Or F1,
Yeah. Yeah.
right? I mean, people drive a car, but it's
Sure.
not really
God,
the same thing.
I forgot about the
In the
sail
same
thing.
way that people can throw a football in the backyard, but they're not
Yeah.
playing football in the
That
same way.
I
Yeah.
forgot that sailing thing is really cool. And it's made like hockey got a lot better with high def TV. Like that really helped
Hmm.
hockey. The
Yeah.
the graphics on the sailing. Because you can never, if you're watching sailing, you're like, I don't know who's ahead or behind, like what's going on. And then the graphics really change it for that. I find that kind of incredible.
I agree. I think the production quality of some of these emerging sports is change, or like you said, legacy sports, but where the intersection of data and production quality is just skyrocketed.
Yeah,
I, I mean, just like if you look at, just even a football broadcast now, and you see all of the additional data that's being provided in game, or something like, PFL, Professional Fighters League,
yeah,
relative to UFC. I mean, you look at a PFL broadcast, which I think it's really interesting. We're not investors, but I know the team well, and I think they're great. Um, it is a completely different experience given the granularity of the data that they're streaming to you in real time in a really high production quality event. I agree with you. I think the way these things are depicted is critical, which is interesting. But then the flip side is also true. If you look at some of these, golf YouTube streams,
yeah.
production quality is not high,
Right.
but they're incredibly fun.
They're super
Like
fun.
the energy is palpable, and watching Bryson DeChambeau try and hit a hole in one over his house onto his little
Right.
green, and then having a guy paying a guy 100 grand if he can get one in
Yeah.
within the 10-hour span. I mean, it's just like
It's
that
so fun.
stuff's awesome.
You're going to get
Yeah.
everyone excited about sports investing. Well, let's finish with the Detroit Renaissance. And I was talking to one of these billionaire hedge fund guys who it's one of these like TPG guys who just has all the information in the world, like he's the president of the United States, like you know, and and everything's just like a prop bet, the entire planet. And he said something that was interesting, which was if he could buy call options on Chicago, he would 100-year call options. And his the idea was that it's an earthquake free place with unlimited fresh water right next to it as climate change pushes people north. But Detroit, different thing than Chicago, has seemed like the poster child for a city that was once and then will be again a great thing. I mean, how'd you come to be involved in that, and where are you on that?
So the point that this hedge fund guy made about, I'll call it the Great Lakes states, him focused on Chicago, me on Detroit. I've been speaking about that for years.
Yep.
I very much believe in the thesis of climate migration, and very much believe that the Great Lakes states, and in some cases, once great cities, will benefit disproportionately from that. So, as I said, I was born in Detroit. My dad was a Ford guy, so that's where I started life, and it's always been very near and dear to my heart. Followed my sister, who has 2 degrees from Michigan, to U of M. Met my wife at U of M. Both our kids went to U of M. Her grandfather went to U of M.
Wow.
Nephew, cousin, go to U of M.
You
Uh,
should give
very
Northwestern a
involved.
try.
Yeah.
Just kidding. Right.
Um, very involved with the university. But about a decade ago, I started, and this is completely separate, investing in affordable workforce housing, because that was something that I felt intersected m mission and being able to make solid economic returns. East LA, Aurora, Colorado, Salt Lake City, Brooklyn, and then Detroit. I co-founded a real estate business in 2017 with some other Michigan folks, um, called Great Water, that was born of the opportunity zone legislation that was promulgated in 2017. We have raised about $300 million of private capital across 10 funds. We are the largest multifamily homeowner in Detroit at this point, with 2,000 units that we've rehabbed and built, and we have an additional 700 in Lansing. One of my partners, who again, born and raised in Detroit, he and I had this even bigger vision for how the placemaking real estate investing that we were doing through Great Water could be enhanced and hasten Detroit's recovery by investing in things that people who lived in Detroit would want and find exciting. So we partnered with a great restaurateur and we own restaurants and are developing restaurants downtown and in the neighborhoods. We, with that founder who founded a restaurant called Marrow, um, we started a wholesale meat business called Marrow Detroit Provisions, where we are actually distributing sustainable, um, ethically handled meat from the Great Lakes states that is being sold through gourmet markets, but also Zingerman's, which you must know,
Of
like
course, yeah. Yep.
right, everyone knows Zingerman. So Zingerman sells marrow meat. And we have also invested in some CPG companies based in Detroit, jobs in Detroit, but now selling products nationally.
Yep.
So we are on the cusp of actually raising a fund that has three parts to it. A CPG studio with a set of shared services to help the incredible entrepreneurs in Detroit with capital and know-how to scale. A venture fund to invest in the seed and Series A rounds of these and other companies, some that we develop in our studio, but others in the ecosystem. And we've already made a few investments that we've been warehousing in a beverage brand I called Casamara being one of them. And then a real estate fund to help us acquire and develop buildings, which we're already doing personally, but now to do it at greater scale that
Right.
we can put companies in to again get this flywheel going of great people, great entrepreneurs, great jobs for Detroit, putting money back into the system, but with kind of global expertise and know-how in manufacturing, distribution, and marketing. This then also connects with the work that we're doing through University of Michigan in with a partnership with the School of Education and this project, this school on the Northwest side called Marygrove. So we're doing all of these things both with kind of foundation partnerships, University of Michigan and university partnerships, and our own private capital
Mhm.
to help make Detroit the city that it's will benefit from climate migration, but even for the even absent that, rebuild this once great city and make it great again.
Yep. And why doesn't housing, I'm curious about this, why doesn't housing alone do? I recently went on a vacation to the, and just kind of traveled around the lower Mississippi River, which, putting aside my vacation choices, there's these like little towns there. Climate thing's different there, but like, I don't know, Natchez or whatever. And they're these just beautiful old towns. They're kind of deserted. The Piggly Wiggly or whatever moved to the freeway, and then NAFTA came along. But as a just a town, it's like on the Mississippi River with unlimited water and all these beautiful old homes for like $60,000. Why don't just a bunch of young people just move there? Like leave LA and San Francisco and just colonize these, or whatever the right word is, take over these
Mhm.
towns. Just on housing prices alone, you buy a beautiful house on a hill for $80,000.
So it's interesting. I mean, a lot of places have tried to address that issue by providing incentives for people to relocate, not just in the United States, but I mean, you read about this in Italy and France and some of these gorgeous little towns that have largely been deserted. The reason I think is because if you're talking about young people eventually have families. Kids need schools.
Yeah.
You need the infrastructure that goes along with that. It's not just housing. And that's the key, Kent, to again what we're doing in Detroit is it's not enough to have great housing. It's not enough to have places to go out to eat. You need walkable, safe communities. You need excellent schools. You need public-private partnerships. You need it's and I know that I mean having spent so much time in
Yeah.
Detroit with um, both state and city leadership, who I think have done a really fabulous job, but there's so much more work to do. It is so hard. It is really, really hard to change trend. Now, Detroit, for the first time in 60 years, 60 had an increase in population year to year.
Wow.
The first time in 6 decades. So once you get that momentum going, you can do it. You can try and sustain it
Yeah.
and have an increase in speed. I just you can't underestimate how important all of the wraparound services are to make a place attractive relative to just an attractive house.
Yeah. Wow. Well, it seems like you're the third act, if you will, in my little analogy. Seems incredible. Like the sports, Detroit. I mean, it all seems amazing. How would people follow you? There's no point in really the IA part, but like the current things you're doing, if people want to keep up with you, they follow you on Twitter, or what do you recommend?
I certainly, I probably at this point use LinkedIn more
Mm,
for kind of business oriented updates. I do use Twitter for
mm,
sure, and I do write on Medium. Um, Now and again, I will say
mm.
my writing has slowed when I write. I write like pretty deep, thoughtful pieces.
Yeah.
But yeah, info arbitrage on Twitter,
Okay.
me and Eberg Capital
Great. And
on,
and working with your
yes,
family, that's good. That's going okay. You're all getting
it's
along.
it's great. Yeah, I mean that's a whole other podcast, Kent, that I can get
Yeah.
into. Suffice it to say, my wife Karen, whom I've been with since Michigan days,
Hmm.
um, she's a clinical psychologist. And let's just say that her role in helping us be effective in bridging the gap between being super close as a family and as parents with our children, as well as colleagues, she should get paid overtime.
Okay. Well, we will do the family business podcast at some point. Thank you so much for doing this.
Kent, it's my pleasure.
All
It's
right.
these are great questions. It's really great seeing you, and all the best for a great 25.
Thanks so much. All right. This has been the Something Ventured podcast. Roger Ehrenberg, my guest. Talk to you next time.